Hey folks, welcome to Easy Finances. I'm Wes, and this is a channel where we talk about your money and how to get the most out of it. Disclaimer, I'm not a financial advisor, and if you have serious questions about your money situation, your particular situation, and your finances, then please seek out a financial advisor. This is personal information that I've obtained over the years, and it's something that I hope to share with you and share with everyone. And hopefully get some comments on it and learn a little bit more myself if I can. But we can learn together, and this is an inaugural video that I want to make this video series for my daughter so that she can understand and have some kind of understanding of finances. She's in college now, and I think it's important to teach your kids something. Summer's coming up, and I want to teach her about finances. It's something I wish I would have known more about coming straight out of high school, coming out into the military, and I just didn't have a background for that. But I want to make sure that she has that information, she can succeed and be successful. Plan to make different video series on this channel, and we'll talk about CDs, savings, credit card usage. Let's see what else we're going to talk about. If you want to do other types of investments, real estate. Let's see what else. Options trading. That's something else I'm into. But this is the first video series, and what I'm going to talk about for this particular series is making an investment portfolio. I'm using M1 Finance, and I'll put a link down in the description for each one of these types of portfolios that we build and go over. And as a disclaimer for that, if you do sign up using those links, or where I share the pie and you use that pie, or you sign up using that link, then you'll get $10, I'll get $10, and that $10 that is given to me is going to go into this portfolio. I've put $100 in there initially. I did notice that wasn't enough to kick in all the investments to get a little action going out of them, so I put in an additional $50, and then I'll put $10 a month into one of these portfolios that we have listed here. I've got various types of investing laid out in these portfolios, so ETFs only, individual dividend picks. So I like dividend investing, so I want to pick my own stocks and do that. I've already done that, but I'll go over what that entails and how that works, and we're going to monitor what the returns are on all of these over time. This is the first day, obviously, so there's very minute changes for today, and then eventually we'll hit each one of these, and we'll go over them every week for the foreseeable future, honestly. And then we'll get into other video series with, as I said, the different types of investments, the different types of personal finance type issues. But with today's video, we're talking about investing and investing in ETFs only. Now, there's a number of reasons why somebody might want to pick an ETF, and if you do pick your own stocks, you might want to have an ETF as a backup, just to shore up some of your possible mistakes, especially if you're just learning. But primarily what people do with ETFs is throw their money at it because they don't have the time or don't want to put any effort to research individual investments themselves. You can put your money into these products, and a fund manager will manage what stocks, what mix of stocks, what to buy, what to sell, what investments to put their money into, and they will charge you a small fee. We'll go to the research here and take a look for the ETF portfolio that I've picked here, which is Vanguard Total Stock Market, Vanguard Real Estate, and Vanguard Total World Bond ETF. And the reason I like Vanguard is because of their low fees, but we'll take a look at the fees for each one of these. The fund manager for Vanguard Total Stock Market will take 0.03%. That pays them, that pays for any frictional costs or costs when buying and selling stocks. And in return for that, you get a 1.89% dividend yield and a very good return. As you can see, for 5 years, you've got a 56.71%. There is some proof out there on Yahoo Finance that says that on average, let's see, for this category of ETFs, you'll get a 7.5% return, or at least for this year. And then as you can see, VTI has killed that this year at 14%. You can see a 5-year average return of 16.11%. That is amazing. So there's a good reason to use ETFs, and someone who just has money, doesn't want to take the time, doesn't want to put in the effort to get all of this information themselves, can receive these dividends and capital appreciation with just basically putting your money into that portfolio and letting the fund manager do the work. It is a good way to, if you're a busy person, as I said, if you're working hard, working many hours, it's a good way to put your money to work for you. I recommend breaking it up into different types of investments. It's what I do. The proper percentage is going to differ per person, obviously, and it's something that you want to decide for yourself, or with the help of a financial advisor, go ahead and determine what's right for you. I like this particular breakout because I want to be heavily into stocks, and I think most young people probably should be more into the stocks than anything else, but it's my personal opinion. You can take that for what it's worth. But for this particular portfolio, we have the VTI, the VNQ, and the bonds. So with real estate, let's see, what was the return on stock market here? Let's go over this real quick. 56.71% for 5 years with a 1.89% dividend yield. That means they pay you out 1.89% every year, just simply for holding that investment. And with real estate, you get a higher yield, dividend yield, that is, at 3.79%. So that's money flowing into your account a little more frequently, and a much lower capital appreciation, but still a pretty handsome one, 24.44% over the 5 years. It's a pretty good deal. And with bonds, you're not going to see it fluctuate a whole lot in prices generally, but you get a decent yield, and it's considered very stable. And it also acts as a buffer for if the stock market goes down, if interest rates go down, for example, then your bond prices are going to go up. A lot of times real estate will go up if interest rates go down because people are buying more real estate. And then you have all of these situations covered. So you have the stock market, you have real estate, and you have bonds, which all react differently to different financial market information. And that's why people will pick those ETFs. It's easy. It's something you can ride the returns on. You get capital appreciation. You get some money flow going in. It's a win-win for everybody. And even if you're an individual stock picker such as myself, you might have a couple ETFs. I personally pick my own stocks for the stock market, but I do have VNQ and Vanguard Total World Bond ETF in my personal portfolios. So in this series, this is the 3 ETFs that we're going to cover, and I look forward to the discussion that people put forth down in the discussion area. And if there are questions, of course, I will go over those. I'll pick questions out and go over them each week and answer those as well. It's an introduction to our portfolio, and we'll see how it reacts over the next period of time here. And if you like this video, if you're interested in seeing this go forward, please like, comment, share, subscribe, and ring the bell so you can stay informed of future videos. Otherwise, it won't let you know. But this is what I wanted to talk about today, and hopefully it's a good introduction to ETFs, the M1 platform here. why somebody would want to use ETFs as opposed to individual stocks, and what we plan to do with this and the channel. Thanks for watching, and we'll see you next time.